This is Ryan Under with your Tuesday, October 8th morning wake-up call. We'll start off with the harvest numbers. In corn, harvest was 30%. The 5-year average is 27. In beans, harvest was 47% compared to a 5-year average of 34. Obviously, the recent forecast for dry weather for all areas is the number one reason why harvest is this much out in front of the 5-year average. In fact, traders, or analysts, I should say, were expecting corn harvest even higher than the 30% number. But again, beans at 47, well ahead of the average. Now let's turn that around and look forward. The forecast still offers virtually no rains whatsoever in the 10-day forecast for all harvest areas. In fact, yesterday, the 10-day maps yesterday had light showers out there here and there in the harvest areas. This morning, that forecast now has nothing. I mean, not even a sprinkle for any harvest area. So harvest pace should continue very quickly here. Yesterday in corn, there were signs that may have suggested light fund short covering. We're guesstimating right now funds at about 10% record shorts for corn and beans. So in other words, we're now at the level where it's very, very close to being flat, but still at 10%. Yeah, we would still expect to see an occasional light fund buying day here or there. Most analysts agree that at this point, there is no reason for funds to turn around and flip and go long. Grains have solid enough fundamentals to suggest they don't need to go much lower, but we would need to give funds reason why the grains could bounce in the next 6 months or see active support there. Most people's estimates are that South American weather might cause that, but at this point, South American weather forecasts, in fact, this morning, have moderate rains in the 1 to 5 day, moderate rains again in the 6 to 10 day, and moderate rains again in the 11 to 15 day. So we had been talking quite a bit of weather concern in South America, but now the 15-day forecast has regular moderate rains for almost all areas that they want to see pick that up. Switching over to wheat, the planting pace 51%, the average is 52%. We'll mention again, no rain in the winter wheat planting areas, so planting should be able to move along just as quick as anybody wants. There is some concern that Russia may lower their production estimates here this week. There are Russian ag ministers supposed to make a comment on the Russian wheat harvest forecast, and there is thoughts that he may be talking about lowering it a little bit. Switching over to cattle, another box beef jump higher. Choice up 335, select up 172. That is a significant 2-day bounce. That fast of a bounce over 2 days, initial impressions would suggest that was from a slowed slaughter last week. That thought process may have been what kept futures from reacting as much to a box beef jump like that as we would normally expect. If the box beef jump came from a slowed slaughter, that's not exactly the most positive news yet. Now, what slowed slaughter would do to us to prevent upside would be that it would start bunching up cattle numbers, although this week's show list is down 6,400. So for now, we do have a higher box beef without any setback from seeing more cattle numbers this week than we would expect. Still want to watch out for that over the next couple weeks, but again, for this particular week, not seeing that cause an influence on the show list. Lastly, to mention, we do have a couple very important chart resistance levels in cattle coming up. The 6-month high in December cattle is 190.075, and the 12-month high is 191.625. So a couple highly important chart resistance levels here. And as much as box beef is up and everything like that, it's tough to wonder, do we have enough positive fundamentals to take out 12-month highs, which aren't that far away here? So again, reason for resistance at those levels. If you have any questions on any of the markets you've heard today, give me a call, 815-578-6159, or continue tuning in to Morning Wake Up Calls.